right, testing, testing. 1, 2, 3, testing, 1, 2, 3. What a glorious day. How are you doing? Mind if I eat my banana? So Dan, did you start the videos? And this, I think the sound is low. I can't quite tell, but was it okay? Yeah, all right. See, I recorded it exactly the same setup that I have now, and you guys say you can hear me fine. Then I listen to the video and it sounds good. See, now it's there. Thank you. Maybe you guys have told. Okay, is that better? Is that better? Okay, a little, huh? Yeah, well, no one mentioned it before, and then I recorded these videos and the sound is very low. So nobody told me. So yes, anyways, I haven't touched the video training course website, FX Bootcamp, for like a year. I haven't, and it used to work just perfect, fine, not a problem. Now, for some reason, when you sign up, it's not using a very clear process. So somebody has changed something somewhere, and it wasn't me. So there's been updates, and so now a lot of you have signed up, and it doesn't even really have you create an account. It just sort of drops you somewhere, and you don't know your password, and then it won't send you a new password. It's a real nightmare. So I apologize for all of that. So I will spend some time. Even if I have to manually make everyone a new account, then I will do that. But I'll get you taken care of before we start today, okay? So I think what it is maybe it's not sending emails, and the emails don't take you through like a confirmation process or something. So I don't know about that, but I think that's what it might be doing. So anyways, don't freak out. Yeah. Yeah, so I don't know, there's a part of the server that's not sending. So I don't know. Great. So anyways, I'll get you taken care of. Don't you worry. Let me just finish my name. Yeah. So I don't know. So I think what it does is you sign up. Then it's probably supposed to send you a bunch of emails like a confirmation of payment. Then it's probably supposed to send you like, please confirm your account. And then you click on a link, and then maybe you create a username and password or something. I don't know. Can't remember, but it used to work. Now it doesn't work. How about this? My new PC, I can get 14 of the monitors working. But it's not enough. So anyways, everyone else ready to go? Is anyone else thinking of joining? the crew, because we're going to do live training today. Okay, so yeah, if you're going to do it, you got to sign up. Otherwise, you're going to miss the live stuff today. We're going to get new monthly pivot points, and so we need to meet as a crew and go through all the major currency pairs and commodities, looking for opportunities. Yeah, it's right there on the website. So there's monthly swing trading setups. Then we got monthly, weekly, month. So 6 weeks we'll meet up. Monthly pivots for March, and then monthly pivots for April, and then weekly pivots through the middle. That's not bad, right? 6 weeks. I think I only promised you 4. All right, so that's cool. Yeah. So all of a sudden, just in the last couple of days, now you're having trouble hearing me. Is that what it is? So that suddenly the mic's no good. Yeah. Well, I wish you closed the opening before you record videos. All right. So hang on. But I have a feeling. How about that? Yeah, hang on. I think I know what's going on now. All right, testing, testing, 1, 2, 3, testing, 1, 2, 3. Is this all right? What's the sound quality level? Better but low? A boot low? A boot low. So that's impossibly low? All right, all right. Is this any better? All right, testing, testing, 1, 2, 3, testing, 1, 2, 3. Wayne in Spain falls mainly on the plains. Now it's perfect, right? Yep. Not perfect, but okay. Oh my God. That made sound okay. Really? All right. All right. Well, we'll see where it goes from here. All right. All right. So any last questions for the training course? We're starting today. Too low. Really, sound is low now? Shit. So, wow, it really, then it's not registering the new, hang on. I plugged in. Testing, 1, 2, 3, testing, 1, 2, 3. Testing. Well, it's supposed to be working fine now. All right. Now it's good. Awesome sound, right? And holy smokes, it's 1,000 times better, right? Hello? 1,000 times better. Still low. I don't get it. Why is it not recognizing sensitive? HyperX. Yeah, well, that means it's not actually using the mic. It's using. Now you're going to say, oh my goodness, now that's what we want. There we go. Finally. You say, finally. Okay. All right. That was awesome. I'm feeling better for those videos again. Yay! All right. Anyway, let's get going. Yeah, don't say it. Come on. When you see this up and running, I have 14 to 16 that are run external ones working, but some reason won't work, so pull the cables. Try them again. Terrible. Breaking up. Maybe the gain is set incorrectly. Okay. No, it should sound perfect, guys. This is a very camera. Fox News. Okay. Nice sentence. Now, there should be no problem. Should be absolutely no problem. Can't. All right. All right. Well, if this doesn't solve our sound issue, then I'm going to have to do a full reboot. Yeah. So I don't know. When I close the room, some C++ error or something. So I don't know. Let's see what happens. All right. All right. All right. Let's begin. Me. All right, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But stay small, stay humble, focus on the long term, and never risk money not worth it. Maybe it's the Fox Business News that's ruining it. Yeah, totally, Charlie. I know what Chuck's up to. All right. So, anyways, yeah. If you have questions about the swing training course, please ask. Feel free to ask because we're starting today, and it's going to last the entire month. All right. So, without further ado, let's get into the markets. I hope you can see the charts okay. Sir, yes, sir. Go. So I got to use some red here. You got some beast action. Got the beastie. We could take a look at that.
It's trying to. There we go. Okay, we broke out of the wedge last week, and it's following up. Live portions, yes, they will be recorded. Yes, it's Johnny Boy. No worries, Mark. We've been smashing our head against the wall anyway, so. Yeah, Ben, I'm going to look at everything. I don't know. The programmers, someone somewhere did an update on me, and of course, all updates fail. Yeah. Unless we're doing that at 5 p.m. I have the URL. No, I don't have the URL. Yes, the first one is today, 5 p.m. There you go. All right. So, anyways, we finally broke out of that apex. I was hoping up, but of course, you know, March, right, for the yen comes in like a lion. Rawr. So it's charging to the downside. Not entirely expected, but not entirely wanted either. Going back in the longer time frame, you can see that hopefully on the long run, what you're trying to do is, you know, keep it above, in this case, the 382, because we already made the 50%. Okay. You don't want it down at the 50% again, because I figure if it comes that far, it's going to drop to the 618. So you kind of want to keep it above and have it break to the upside, and it's still tickling the 382. Okay. But it's not exactly what you wanted, right? Right. Ideally, you keep it above this M3, or sorry, M2. Ideally, you're working your way up. Sure, it could be a fight. Sure, it takes some time. I think these yen pairs are waiting for Trump's speech tonight, right? And I think this is probably the launching pad, but it's hard to stay solvent that long, huh? Okay. For those that are bears, you're probably the same thing, profitable but not happy. It's a tough place to be. Okay. Well, Ryan says, yeah, need to be led by the 10-year. So what we need from Trump now is for him to say, yes, I want to do a stimulus. Yes, I want to cut taxes. We're going to do it soon, not later. That kind of thing. Because as far as the Fed's concerned, the Fed wants to raise interest rates, but they don't have it yet. It's not in the cards yet. And I've been saying it's June since last summer. And so I still think it's June that this one they'll disappoint. Then there's an early May meeting, I think, and then the June one is late June, right? And I think I don't think we quite have the data. You know what I mean? I don't think it's quite there yet. We have full employment, but wage growth isn't huge. I think the inflation that is in the data, like CPI type inflation, is coming from oil used to being $40 a barrel, then it was 50, now it's 55, 60, right? And so that's the CPI, but it's not the PCE. What's the difference? Anybody know the difference between CPI and PCE. Well, it's consumption and expenditures. So I guess they're very similar, but they're very different. And let's boil it down to what really matters. The Fed doesn't use CPI data. So I guess that's the biggest one. The biggest difference between CPI and PCE, the Fed doesn't use CPI, so who cares? Okay? Ah. James, what's the interest rate in the United States right now? What's the Fed funds rate? Should never say what's the interest rate. There's no answer to that. What's the Fed funds rate? How about this? Anybody can answer. What is the Fed funds rate in the United States? .5 to 0.75. So James says there's a 69% for a half to 3/4. So that means there's a 69% chance the Fed's not going to do anything. Right. No, but right. But some people mistake that as thinking that they're going to raise it that much. No, that's what it already is. And they're pricing that price in. Okay. So now, so now you're looking at a 31% chance of some sort of hike. Okay. But anyways, let's do some oil. Okay. 54, very topish. 55.5, very, very, very topish. Okay. It's been a long month, huh? Our low around the M2, and we're stuck. Can't even get to R. Stuck on the M3. That's tight, man. Well, put it this way, James. 0.5 and to 0.75, never in 100 billion years are they going to raise 0.75%. So that's not what it means. It means that it's going to stay 0.75%. Okay? Yeah. So yeah, if they do raise, it'll be 0.25%. Yeah. And also remind yourself, right? Remind yourself that it's not really truly a sampling or a survey of what investors think the Fed's going to do. It's the differential in prices in the money market between one month versus another month versus another month versus another month. So it's not a survey of, hey, dude, what do you think the Fed's going to do? Oh, well, let me tell you what my auntie thinks. Okay. It's just differentials in prices. And from that, you can extrapolate what they're pricing in. Well, also, remind yourself why the Fed, once again mistakenly, came out guns blazing. Not, and I don't. To me, I'm always shocked uh, because I don't understand why they're so simpleton about it. They're really, really smart people. So I don't understand why they don't understand. But for example, they say they want to raise interest rates 4 times this year. There's just no way that that's going to happen. And I think they're basing a lot of it based on a stimulus from Trump. And they're like, well, if he's going to add $1 trillion to the economy, that will create inflation. Well, dude, really? Is that what are the members of the Federal Open Market Committee and the Board of Governors, are they really that simple-minded where they watch TV and read the newspaper and gobble up all this Trump crap? Yeah, they said 4, but it makes no sense intellectually. So once again, let's say he comes out tonight and he says, I'm going to spend $1 trillion. Great. When are you going to write a bill? When are you going to plan these projects? When is the money going to get passed by the Senate and the House and become law? When do these projects start? I mean, like, oh my God, they're not even going to be able to pass a bill this year. You know what I mean? Like, okay, so right, the market doesn't want more lip service and all that. That's fine. All of that's fine. So let's say the average Joe on the street, let's say my buddies, when we're smoking cigars, they come over and they're like, oh, what do you think about Trump? He's going to spend this $1 trillion. That's what I expect from common people. Okay, great. But you and I, we're brilliant and good looking. But more importantly, like the Fed, these guys are like PhDs, right? PhD economists. Are they really thinking things like, oh, well, Trump's elected and he said he was going to spend $1 trillion, so now we got to jack up interest rates? Really? Are they that simpleton? The fragile childlike minds? Because I always envision the world like it's run by Illuminati. Well, how'd you like to work your whole life to get into the Illuminati club, right? The Illuminati, they invite you in, and you show up, and you're like, these guys are a bunch of idiots. Oh my God, really? You guys are running the show? Oh no, really? Snap, right? So I don't know. So that frightens me because I I don't get it. I don't get why they don't get it. So, anyways, yeah. So Trump comes out and says he's going to do a whole bunch of stuff. Now, I think cutting taxes is one thing, and then but redoing the tax code could take years, and then I think offering some sort of stimulus takes a lot more. Because remember, okay, the Republicans control everything, and if they're able to do it, they need to do it before the next round of elections, right? But think of the Republicans; half of them are Tea Party. They don't want to spend money, right? They don't want to spend money. The Republicans don't want to spend money. They're like, really? All right, we'll let you spend money on the military. All right, but $1 trillion to build bridges? Why would we want to do that? Right? Is it no? So Ryan talks about weakening the dollar and stuff. All right, here's what I told you guys. Oh, 2010, so 7 years ago. Okay, maybe it was a little early, 2011, 2012, maybe. I told you that we want to buy the dollar every single day, every single week, every single month for years and years and years and years and years. We keep buying the dollar until the Fed stops raising interest rates, and they tell us no more interest rates, no more interest rate hikes, and we might be at 10%. Okay, honestly, because what's the outcome of spending all this money from the central banks? So right now we're in a reflation normalization. Reflation meaning inflation coming back to normal levels. It's not inflation, it's reflation, because we had disinflation, not deflation. Yeah, come on, you need to be an economist, right? But anyways, so we're reflating and interest rates are not going up, they're normalizing. But what happens down the line if we do get a consequence of spending all this money, like real inflation? Then we could go much higher than where we were before. Meaning, instead of 6%, it could be 10 or 12%. Why not? But at one point, right, they'll say no more. And on that day, I will sell the dollar for years and years and years and years. Well, Ryan says, yeah, so they said 4, and then, yeah, well, I mean, it's an interesting thing, right? Yes and no, right? So remember, it's always relative. Yeah, Charles, making note of that. Yeah, no, honestly, and that's how I do it. If you were around during the taper tantrum, I had spent maybe a year preparing people at FX Boot Camp for the day the Fed said they were going to taper quantitative easing. I said on that day, that's the day I become a dollar bull, and I will remain a dollar bull for years and years and years and years and years until the day the Fed says they cannot raise interest rates anymore. Okay. And the Fed meeting, 1 or 2 Fed meetings before they actually announced the taper, there was something like 100% chance the Fed was going to taper. And I said there was no way in hell the Fed was going to taper. And the Fed did not taper, and the market freaked out, and that's what you call the taper tantrum. James says, does the strong U.S. dollar really worked? Well, with his, here's the interesting thing. The United States is the largest economy in the world. 70% of it is domestic, right? So when the dollar gets strong, out of all the exporters, let's just say 30%. The government is part of the economy, and that spending and all that kind of stuff. But let's just say the other 30%. Some are going to benefit from a weaker dollar, like the government that can pay its debt back in weak dollars, right? And some will benefit from a weak dollar, right? So some will be harmed by a weak dollar, some will benefit from a weak dollar, and vice versa. Obviously, the same cruise, right? So some will benefit from a strong dollar, and some will be hurt by a strong dollar, right? Importers and exporters. Let's just say the economy is so deep that maybe it's about the same. Okay. But I think a strong dollar is actually all right for Americans because then they can buy European crap for cheap, right? Okay. See, that's the thing. If you're thinking 20 years out, like I am, I think inflation will be reasonable for a while. Let's say the next 5 or 6 years. Okay. And the Fed raises interest rates, dollar gets stronger. But what happens to an economy when the dollar is strong? Well, what happened to Europe when it had a strong euro? It was mired in deflation, actual deflation, went from disinflation to deflation. Because 1 euro can buy a lot of stuff, like 1 euro could buy a lot of oil. So therefore, oil relative to the euro was cheap. Prices were low. You understand? Low prices is not inflation, it's disinflation if it's falling, or deflation if it's, actual negative year over year. You understand? So you don't have inflation with a strong dollar or a strong currency. So let's say over the next 5 or 6 years, the Fed continues to raise interest rates. Europe is recovering, but it's just not as good as the dollar. And it goes for the next 5 or 6 years. All these economies around the world, they start they're pulling it together and starting to recover. Okay. Meanwhile, the United States will always be the best, the biggest ape in the room, kind of thing, right? Because of its large economy and all that kind of stuff. And then they stop raising interest rates. The dollar starts to weaken. And now it'll get interesting. Because the Fed won't be able to raise interest rates and inflation will go up, aka weaker dollar. And that'll be interesting. Okay? That'll be really interesting, won't it? But you'll get a scenario like we had before, right? Fed funds rate at 6%, dollar weak, everyone talking about the end of the dollar, and the dollar is going to be worthless, and oil prices are at $150 a barrel. All right, well, maybe that's when we're back there. So I'm thinking really 6 to 10 years from now. Okay. So I'm thinking right around 15 years from now, I'm going to take a huge wad of money, and the Dow will be at 35,000, and we'll have this, hyper irrational exuberance again. Everyone's going to be filthy, stinking rich. The Great Recession will be stuff that your grandchildren are learning in school. Ben Bernanke, Tim Geithner, right? John Paulson. Yep, I was there. I was there, kiddo. And then I'm going to buy a huge portfolio of bonds because the stock market's going to be ripper high. Interest rates are going to be ripper high. There'll be a falling dollar. And like corporate bonds and treasuries and such will have a very high interest rate. Do you know what day I'm going to buy it? I will buy this bond portfolio somewhere between 6 months early and a year early. Maybe we'll do another training course on that one. We'll do that some other time. I'll tell you later. Well, Skip says, how will you know that? So I've already did all that. So I did predict, maybe not to the degree, but I did know there was a massive crisis happening when Ben Bernanke became in charge of the Fed. I did sell my house in California at the very top of the market. I did cash out of the stock market at the top of the market. So I did sell everything I owned and drive. I actually didn't drive, but moved to the other side of the United States. My wife had an infant child and a toddler. And I said, we're going to sell everything, honey. Get the hell out of here. We're going to move away from your friends and your family. We're going to go from California to Georgia, and we need to do it now. Oh, and by the way, I'm going to fly out to Georgia without you, and I'm going to buy a house without you seeing it. And then I'm going to go to this furniture store, and I'm just going to furnish the whole thing. I'm just going to walk into a furniture store with a big check and just furnish the whole house. Then I'll fly home, pick you guys up. Yeah, and move. Now, I don't know if you guys are geniuses when it comes to women, like I am. I just know women. That's just. But let me ask you something. Can you convince? Do you think it's an easy trade, if you will, to convince a woman that has a nursing baby and a toddler to say, well, and you say to her, let's sell everything and let's move 3,000 miles away from all your friends? Think of it. So when I say I predicted it, I did predict it, and I put everything I owned on the line, including my relationship, aka my life. And I actually did fly to Georgia, buy a house without her seeing it, and furnished it without her seeing it. And by the way, my wife's not a pushover. Okay? And about 9 months later, the stock market just fell off the face of the earth. It took maybe not 9 months, 4 months. But then it crashed all around us. Okay? So, Skip, yeah, you can do these things. And once again, you guys would be shocked how easy it is if you're, a genius. No, actually, if you're not a genius, it's still straightforward too. One of my memories, uh, right after the crisis, I mean, we were still in the crisis. Um, I was speaking at the New York Traders Expo, and I did a 90-minute presentation on yield curve analysis, the TED spread, and the VIX. And I remember enough people were in the room where the fire marshal came in. Okay. Yeah, pretty hardcore for like 2007, right, Ryan? Guess what? People were just stunned. Stunned that they've lost 40 or 50% of their net worth. And it was so stupidly easy to predict. And that they had financial advisors, right? They had hedge fund managers, they had wealth managers, and nobody did jack. You know what I mean? No, I didn't short it. The best short is going cash and then buying. Well, Hadir says, okay, what do you predict in a few years from now? So there's really two things. So I want to sort of separate the wheat from the chaff here. There are times when the market is at extreme extremes. Okay? And those are easier to predict. So one of the things I'm going to base my bond trading on is a yield curve that looks like that. Okay, that was one of the major things that told me to dump everything. Okay, and so I will do that again. Okay, The only thing is you're only going to see it 2 or 3 times in your entire life. And you probably missed the first one because you were 12, missed the second one because you were not hanging out with me. So there may only be one more time in your life where you see an inverted yield curve, and that'll be the linchpin. So Hadir says, what do you predict will happen in a few years from now? Well, we're not in a scenario like that. The yield curve looks like that, and is that good? No, because it's supposed to look like this. Okay. So we are, like I said, I'm predicting 15 years from now, right? I said 15 years, right? So I got some time, bro. Right? I got some time, bro. But so what I'm expecting is a, a slow global recovery. And then all the old men and women are going to retire and go away. And my generation's going to go in there and screw it up, like, right? And we'll have to pay for consequences. So of course the old people running the show now, they're the ones that printed all the money, right? So at some point, all this trillions of dollars will have a consequence, right? So Hadir says, is it safe to start buying real estate? I was buying real estate 6 years ago, dude. So again, it's the right attitude. You're way, 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 way late, but there's still lots of upside. Sure, yeah, I would assume. Okay, the stock market is at all-time highs. Do you want to buy commodities? Typically, you buy commodities in a scenario like that, but we're not quite at that demand level. But maybe you could. But I don't know. So no, but real estate is only going up 5% a year, right? Maybe 7. The stock market's going up 25, right? So the stock market is way overvalued, and yet real estate probably is not overvalued. Okay. But when I bought real estate, um, I looked at all kinds of deals, all kinds, and I bought a couple houses, and one of them I put back, but whatever. Um, so, anyways, this house that I own now, uh, I I looked at it before the crash happened, and it was very expensive, but it had a great location, great. And then it came down, it came down, it came down, it came down during the crash, it came down very significantly. Cool. So I go in and I say, all right, I want to make an offer. So I put an offer on the house for like 150,000 below asking or something, quite a bit lower. And they're like, how dare you insult us like that? Right? How dare you, I have no such words for you, right? So I go in a year later and I offered that much lower again, lower than my first offer by that same amount. They said yes. And they're like, we'll do it. Just yes. But I was the only guy that had cash. They're like, you're not going to get a mortgage. You're not going to be able to have credit. And like, I don't need credit. What? I don't. That's you. I don't need credit. They're like, done deal. Boom. There it is. I did use credit, but I could get it because I was the only guy that had cash. Why did I have cash? Sold the house at the top of the real estate market in California and sold their stock portfolio at the top of the. Yeah, so not a problem, right? That's why cash is king. So that's when you should have been buying houses. 2009, maybe 2010, right? Did anyone, how about this? I did at one of the non-farm payrolls, I showed, again, there must have been 600 people or 1,000 people in the room. I showed the Spanish stock market at a 786 Fibonacci retracement. Was anyone here for that? Anyone here at that presentation? And I asked people, I said, hey, does anyone here think the Spanish stock market's going to go to zero? Remember that? I'm like, look, it's an 80% discount now. What is it that you're waiting for? Are you waiting for a better deal? You don't think it's going to go to zero, but 80% is not good enough for you to buy? Like, why wouldn't you just buy anything? Anything you figure will probably still be in business in 20 years, right? Just buy it. What the hell's wrong with you? Buy it. No, I want to pick it up at like 90% off. All right? Like, it's not going to fall forever. Did you like Citigroup at 89 cents per share? Right? Yeah, amazing, huh? So yeah, you know, it's funny because the biggest trend right now in the financial markets is indexing. Well, that's what you were supposed to be doing back then. It's so crazy. So now we're at all-time highs and people are indexing. Why would you index? Or how about let's buy a sector ETF? Why would you want a sector ETF? Why don't you do some work and figure out which one of those companies in the sector is actually going to be the winner? Right? Like, oh my gosh, people are doing what they should have been doing 10 years ago. What they do is they look at the stats, right? They look at the statistics and the history and they say, oh, I should have been indexing 5 or 6 years ago, 7 years ago. So now that's what they're going to do. But see, this is when you're supposed to be buying hedge funds. So 5 years from now, everyone's going to say indexing's dead. It's all about smart alpha, smart beta, smart something. And stock pickers will be back again. Yeah. It's amazing, guys. I don't understand why the world is so simple. I get Flash missing. This application requires Adobe Flash. Wow. Yeah, I get concerned if I'm the smartest guy in the room. That, that shouldn't be. Yeah, in Canada would be fine. But we're talking 15 years from now. So 15 years from now, everyone's going to be in the stock market. I said Dow 35,000, not Dow 20,000. Okay. And because of inflation, which I predicted to be part of that, with inflation, the stock market go up because it'll take more dollars to buy products. Therefore, companies get to report sales have gone up. No. Prices have gone up. The prices have gone up because the dollar has gone down. Oh, no. Sales went up. Woohoo. And everyone will buy the stock market and they're like, yeah, great. Woo, sales went up. Like, no, gasoline prices went up. Oil prices went up. No, it's all sales. Yeah. Then you look at the profit. There's no profit. And then interest rates go up, interest rates go up, interest rates go up. There's no way in a scenario like that a company will be profitable. They'll have sales, but no profits. Okay, so what do they need to do? Borrow money. But no one wants to lend the money. Everybody's in the stock market. Stock market's going up 10% a year, right? Okay, here it all comes. So now the bond market has to compete with the stupid stock market, which means interest rates on the bonds will go up, aka yields will go up. And then when I can get 8 or 9% in a safe conservative portfolio, I'll buy them. All right. So, anyways, ballots better than expected. Good. Negative 69. That's good. 1.9 consumption. Okay. Personal consumption up. GDP quarter over quarter 1.9. That's disappointing. Wholesale inventories. Okay, fine. GDP price index 2.0 versus 2.1. I don't know. It looks disappointing to me, doesn't it? Dan says, how hard is it to get into a hedge fund? Now, first of all, you need to be an accredited investor. Right. And let's say you need at least $1 million to become a small limited partner in the hedge fund. I mean, $1 million cash, not net worth. But even then, hedge funds now, they don't want, there's too much regulation and stuff. They don't want, even $1 million wouldn't be enough. They'd rather work with institutions. Right. Yeah. But if you go to like Barclays Hedge and subscribe there, pay a couple of $1,000, you can get a list of performing hedge funds broken out in sectors and benchmark and stuff. There's also a lot of hedge fund conferences you can go to. So anyways, that seems a little bit disappointing here. So just on that topic of if the stock market's going up, interest rates are going, yields will go up, right? Because the stock market, the stock market goes up, stock market prices go up, okay? What happens to bond market prices? If all the money is going into stock, what's happening to bond prices? Demand up for stocks. Demand is therefore down in bonds, so bond prices go down. Okay. Okay, so bond prices are down. Let's put stock market up. Okay. Okay, but I told you that companies were not profitable, right? So they need to borrow money. How are they going to entice you to lend them money when you have other opportunities? For example, you could just put money in the stock market. Stock market's going up 10% a year, let's say, or more, 20% a year. So you're like, well, why should I lend you money? So what would you do now as a company where you need to borrow the cash? Pay more interest. So as bond prices fall, that means nobody's buying bonds. Demand for bonds are low, right? Prices go up when demand's high. Well, that's why stock market prices are going up. Everyone wants to be in the stock market. Then you're like your AT&T or IBM or something. You're like, hey, guys, don't invest in the stock market. Invest into us. loan us the money. The stock market people are like, no way, why would I lend you the money? And so they're not buying bonds, so bond prices fall. So now as a corporation, your IBM, you're like, well, what if I paid you 5%? The stock market people say, are you kidding me? The Fed funds rate is at 6.5%. I could get a risk-free investment at 6.5, but the stock market's going up 12%. Okay? You're like, wow, what if we paid you 6.5? Right? This is IBM, the chief financial officer. The stock market people are like, are you joking? I can get a risk-free investment guaranteed by the government at 6.5. So why would I risk it on you, IBM, for the same price? So then IBM says, what if it's 8.5? Oh, really? They think about it. And then the IBM CFO says, well, no, because it's a bond, we'll guarantee your money. You'll get 8.5% per year. And then when the loan is over, we give you all your money back. By the way, at 8.5, your money more than doubles in a 10-year period. You know what I mean? So you're like doubling your money, more than doubling your money over 10 years. And then you get all your money back, right? So you lend them $1 billion, they pay you 1.3 billion in coupon payments, and then you give you your billion back. You're like, oh my God, right? And if the company goes bankrupt or has some problems, you're the first one in line to get your money out. If you buy the stock market, you don't get your money back. The stock just falls to zero if it goes insolvent. You don't get to go to bankruptcy court like the bond, bonders. So you're like, all right, so it pays more than the treasuries, because there is some risk that IBM could go out of business over 10 years. But the stock market has unlimited downside. And I do have some covenants and some rights, right? And I get a guaranteed cash flow, which, by the way, you could leverage. Okay, I'll lend you the money. And now you take some money out of the stock market and you give it to IBM with a guaranteed 8.5% annual payment plus your money back. So what happens to the stock market now if lots of people do it? Stocks go down, bond prices rise. Okay? So if you're the first idiot in the market, like I said, I'd be probably a year early. So I pick it up at 8.5, and then other people start getting on the clue train. The stock market starts rolling over. Now everybody wants bonds, and guess what? Bond prices are going up. But I bought it low, remember? I'm sitting there at 8.5%, and I bought a bond when nobody was buying bonds, and prices were low. Now all of a sudden, everyone's like, get me out of the stock market, get me out of the stock market. And so bond prices are going up, which means I could dump my bond now for 20% more than I paid for it, just cash out now, just if I wanted, or sit on it for the next 10 years and earn 8% while the stock market is losing 27%, right? I go out, I'm on the golf course with my neighbor, and he's like, damn, this market's killing me. I'm like, yeah, I'm only doubling my money. It's awesome. He's down 27%, and I'm up. Prices are going up. I'm collecting. I have income, right? I'm earning income at 8.5%, and my neighbor's losing 25% of his net worth. And I'm like, dude, and the value of my bond, I could sell it whenever I want for a lot more than I paid for it. But why would I do that? Might as well just sit on it till maturity. And then what happens to interest rates? Interest rates go to 6.5, 5.5, 4.5, 3.5. All of a sudden, interest rates are 1.5%. You understand why bond prices would be going up? If I'm earning 8.5 and the Fed funds rate dropped from 6.5 to 1.5, you think I'd have any problem saying, hey, you have a choice. You can buy the treasury for 1.5, or you can buy mine that pays you 8.5. You think I'd have any problem selling that bond if I needed to liquidate and say, yeah, I've been enjoying this income stream, but I'd like my cash back? You think I'd have any problems? Hey, would anyone like to buy this bond that pays 8.5%? Oh my God. I mean, so you price it in. So you do discounted cash flow, forward to the, how much time is left. And so you end up selling it for a face value of, like, no joke, probably like 1.33. Probably actually a lot more than that. Okay. So anyways, a little macro. Sorry to go macro on you guys. So yeah, so that's what I'm planning. But not this year. Not this year. Not this year. Wayne, do you have U.S. Wayne, do the U.S. have preference shares as well? I'm not sure what you mean by preference shares, but yeah, there are different share classes. Sure, like preferred. I guess I see what you mean. Yeah, preferred shares. Yes. Okay. Yeah, and Hadir says, where do you buy these bonds? Yeah, yeah. At that time, you could sit down with your banker, your wealth manager, whoever. You sit down and you're like, yeah, I'd like to buy some bonds. And they say, oh, well, we can structure a ladder. We'll buy some 2 years, some 5 years, some 7 years, some 10 years, and we can, average out the yield curve, boost up your income payments, but not be locked in for, the long-term volatility. Okay. There's also closed-end funds, which I think are interesting if you have a little more money. Imagine like 5 billionaires get together. And of course, it's not really the billionaires themselves. Let's say 5 different family offices get together, each managing $20 billion, right? So now you got $100 billion capable group, right? What they do is they start a fund, pool their money into it, and then buy things like long-term real estate, lend money to like infrastructure programs like toll roads in some godforsaken country somewhere, um, or they lend like the Ukraine or Argentina, Uruguay. They lend them money, right? They buy Ukrainian bonds. Not your typical cup of tea, right? But if you already have everything, you can assume a little more risk, right? What do you care if you lost $1 billion? You're like, well, at least I got 30 or 40 more, right? You're like, oh, really? Bad year. I lost $1 billion. Huh. You get in your private jet and fly somewhere and nothing's changed for you, right? So anyways, they can get into these crazier longer term investments, but they have really smart people doing it, and that actually fly out to these countries and negotiate with the government and the president of the country, that kind of stuff, right? And you can buy into these things. And it's part of the full disclosure to know who's in it and to know that you're locked in with a couple of, with 5 billionaires, and you pop in 100 grand. This is kind of interesting. What happens is you buy a seat at the table. So if you can imagine, there's like a conference table and there's only 30 members of the Illuminati board. What happens is you're buying a seat. Really is what it is. There's only so many shares, so you buy your shares, and all the profits are split equally with everyone based on the number of shares you own. So you might own one share, and the billionaire next to you owns 1,000 shares, but you can buy into these things and have them trade sophisticated, opportunities for you. And the cool thing is, very often when someone wants out, they have to sell at a discount. So very often, let's say you can buy like $1 million buy-in will only cost you 800,000, but you're controlling $1 million worth of shares. So interesting, right? All right, so let's go. I need to uh, set everything up for the training course. Um, People were able to buy and secure their spot, but the system isn't creating their accounts properly. So I have to look into that. Oh yeah, I had the Mexican peso up uh, earlier. I was looking at it. So yeah, if you wanted to, right? It's a pretty straightforward trade, I think. Yeah, so yeah, I'll likely email you guys directly. Yeah, Hadir, I'm teaching you how to swing trade. Specifically swing trading. So today what we are doing as a group, guys, is we're going to get new monthly pivots. We're going to look for trading opportunities of, let's say approximately 500 pips. Okay. And so every, um, so the March pivots and the April pivots we'll do together. Those are the monthly swings, and then we'll do weekly swings on when the market opens on Monday. For me, it's Sunday nights. Okay, so that's when we'll be meeting. Okay. Any last questions about that? Is anyone else planning on signing up just so I can keep an eye on it? Anyone going to sign up and join us? It's 5 p.m. Eastern time tonight. And then it'll be an entire month until we get another opportunity to do those monthly swings. So, and it looks like I have work to do. So you need to sign up, and then I need to manually create your account. So, I mean, you can sign up and it'll lock in your spot. It's just not creating a smart and easy way for you to access the video. So I have to figure out what the bug is and fix that for you. But if you're going to sign up, sign up. It should be in the next couple of hours, Nick, right? Dennis says can't pay until next week. Then, I mean, I can't move the monthly pivots, right? The monthly pivots are coming out tonight at 5. So yes, Shaw. Oh yeah, I guess my mic went out. I'm installing my new trading PC, and you think it would be straightforward, like you would just plug in 16 monitors and it'll work. It's not that easy, and I can only get 14 running right now. And I just don't have enough time in the day. So I'm usually doing it at night or over the weekends and stuff. I'm supposed to be studying. But anyways, I haven't got it fully up and running. But once I have it fully up and running, then I'll do the uploading again. It's just too difficult on my little laptop and stuff. Yeah. No, no, no. It's fair, Sean. Oh, sure. Yeah, Dennis. Yeah, That'll get you like 5 weeks of live stuff plus the videos. Yeah, it'll be fine. We won't mock you for being a week late. All right. Oh, here comes Dennis. Hi, Dennis. Yeah, we got room for you, bro. Any last questions? Going once. If you don't know how to trade this USD Mexican peso, you need to go to YouTube and find the video. I think it's under Trader's Way, under there, but type in how to trade MXN in forex. That'll either get you Rob Booker or me. Going twice. Beep, 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 beep.